Hello, guys. This is the second attempt for this recording. Welcome back to Daily Market Review. Today is June 26th, and we had a pretty ugly day, but let's go over it. So I'm going to start with the hourly chart because everything is basically pretty much happening on the hourly at the very moment. As you guys know, I think you had an objective on the hourly. But more importantly, so this was the objective, but more importantly, it had an hourly S&T divergence with the S. That's why everything is happening on pretty much on the hourly. So that's the framework. So today, before market opened, the S&T sent the price higher, right? It took the engage with a couple buy side liquidity. So this is the low hanging fruit objective, which was taken out yesterday. Then Tuesday overnight session took out more liquidity, equal lows, equal highs, and eventually tried to rally above this high, which is the S&T. This is the bearish S&T divergence. It tried to engage with it. It didn't, because if it does, that changes things really. It becomes a buy model instead of having a continuation to the downside. So that being said, overnight price action rated the highs, and then it rejected in the form of a V-shaped reversal. It's a V-shaped projection. As I always tell you, today I missed this information as well, but the V-shape, after any kind of V-shape, we expect market manipulation, which means we need to have an S&T divergence for a continuation lower. Here, the whole New York session, as you can see, was choppy. The whole New York session was there just to form that S&T divergence at the highs. Here, it formed the bearish divergence literally at the end of the day. In fact, the high on the 1 minute, let me see, it came at like literally 4 o'clock, I would say. Yeah, 358, 357, something like that. So now that we have that, going into tomorrow, we have a dealing range, right? So we have, you can use either or. You can use SMT to SMT, or you can use this high as well. There's nothing wrong with that. I'm going to take the SMT high though, because this didn't engage with the buy side. As you can see today, before New York Open, it was at a range EQ, rallied. Now that it formed the SMT divergence at the highs, now we expect market to go attack the low hanging fruit objective, sell side. This is the second leg basically on the hourly, and then eventually go for Tuesday's low, hopefully. But this is not important at the very moment. Let's take a look at what happened on the 1 minute. All right, this is the New York Open. At New York Open, let me delete this. At New York Open, 9:30, market formed a bullish divergence at the lows. And Nasdaq made a high low, whereas at the same time ES made a lower low, which indicates market is in buy model algorithmically, and it'll either engage with liquidity, or it's in a pullback and it's going to go from discount to premium, right? Now that's our job to determine which one it is, and to be able to do that safely, you go step by step, right? So because we know the market was in the buy model intraday in the first place, we can look at the highs along the way on the south side of the curve and see if we spot any kind of divergence for a potential target. So here, ES made equal lows, equal highs. Nasdaq didn't. That's the first S&T. Then here, I took that one. Here, another S&T divergence at these highs. Here, equal highs again, another divergence here. I think it's this one, yeah. And then all the way up here, I think there is one more, yeah, right there, this one right here, another divergence. So these are potential targets basically. That's how you do pre-market analysis. If it turns bullish, or if it turns into a buy model, we look at the highs and get a target. So here, these are the targets. And as you can see, all of those highs got knocked out today. Okay, so initially I was looking at this one. That was my trade, and because of that, this was my this one. Sorry, wait, which one? Yeah, this one. This one. I think so. Yeah. This was my deal range, and I was gonna say something, but I forgot. Here, I'm gonna delete all those highs because it's irrelevant. I think we had another divergence somewhere. Oh, here, this one. It also knocked that one out as well. I didn't look at that one because I took this one as an original consolidation, which is fine. So here, initially, V-shaped reversal or rejection, S&T divergence, market descended before 10 o'clock, came down into this kind of fair value gap here. And the premium fair value gap is the one on the upside, which was even the premium fair value gap was respected above the CE, which indicates strength, right? Because the market is using the premium fair value gap after touching the range EQ, indicating strength, and then it flipped the inversion fair value gap. That's an entry, or there's a breaker here, entry, fair value gap, another entry, and this is the second leg objective, and then the buy side was engaged right there. Then market pulled back again. Now you have a new dealing range from the discount to this high now. It formed an SMT divergence here, as far as I remember. Yeah, so here's the divergence right there, not that one, here. And market sent it one more time and engage with the actual liquidity pool, the buy side above. There, it failed to break out. This is what we call swing failure pattern. I think that's what it's called. I'm not sure if it's an ICT term though. But it failed to break out, basically reversed. This is a structural shift, and now you have a new new V-shaped reversal or V-shaped projection. Now, whenever we see a V-shaped reversal or V-shaped projection, I like to call out any PD arrays before that. This one, the fair value gaps, like here, these fair value gaps, they're all invalid. Okay, and as I always say this, after V-shaped reversal, okay, you wait for the SMT divergence because that is going to be the manipulation. If you enter before, get ready to be manipulated. Okay, simple, plain and simple. Here it engaged with the sell side. This is 2022 model. This could have ended up being a buy model as well, but it didn't, and I'll walk you through why. Here, sell side is taken, V-shape, another V-shape called formed a BPR here. The fair value gaps are overlapping, and in that leg, it formed a divergence here. ES made equal lows. Nasdaq did not. It sent higher. The short-term buy side was taken. The SMT was completed as objective. Now here, the pace kind of died, right? So it went sideways, back and forth, back and forth. Let me adjust the dealing range here. And then formed a bearish divergence, and that was the first signal about that the market rally from discount to here is just a deep pullback. How do I know that? The way I know that is a couple ways. Okay, this could have ended up, like I said, ended up being a buy model and tagged the buy side. However, here this is the dealing range, right? As you can see, the range EQ was violated, and then it came down into discount, formed the buy model. So market is in the buy model, which means you need to look at two things. One, buy side liquidity, or it's in the deep pullback. So you need to understand where it can pull back deeper. For that, you need to look at the previous range, which is the order block low, the way up to the high, the dealing range, that dealing range EQ. Okay, that's the deep pullback level. Deep pullback happened. It formed a reversal here, bearish S&T, low hanging fruit objective, and then it went for the sell side here. Okay, you can use a couple things. You can either take the bearish S&T, kind of turtle swooping there's a volume balance, you can take that, or this is a breaker block, you can use the breaker block as well, whichever you want to use, or you just sit through it. So it also came down to the initial sell side. Now it didn't engage with the lower one, it just stalled at the higher one, and the reason for that is yes, yes took the external, okay, and the pace died, okay. It formed a V shape here again. Let me clean the chart a little bit though. So it died here a little bit. I mean the pace, the momentum died. V shape reject reversal, and then it pulled back into range EQ of that V shape, right? So here's the V shape rejection, range EQ, market center. So this is the one set up for life, right? Short term buy side, and then this buy side was also engaged. Here though, let's see if it diverged or not. Okay, yeah. So we have, I don't think this is a 1 minute divergence though, but here Nasdaq made higher low while ES was making equal lows. I would say this is a 30-second divergence, so not a 1 minute, because I mean it's not clean on ES. It is clean on Nasdaq, but it's not clean on ES because this kind of causes some sort of confusion whether this is a swing low or not. You know, this area. You can take it as a swing low. But anyways, it sent more price higher, and it completed the buy model there. Why? Because it died. As you can see, after the engagement of the buy side, it failed to break out, and instead, what it did was it flipped the fair value gap, as you can see. But more importantly, the flip of the fair value gap alone is not enough. Okay, I'm going to delete that. You wait for what? This is essentially another V shape, but slower. You wait for the S&T. Simple as that. And here, you have that. Equal highs and a higher high here. Okay, that's the S&T divergence. So price came down, kind of consolidated here, right, and formed a new divergence. And the actually that's not a divergence, my bad. I thought this was equals. Let's see, no. Yeah, it didn't form a divergence. Basically manipulated higher, took out the buy side here, and then it collapsed. So they basically formed a BPR. It's another V shape, so you gotta wait for what? Bearish into divergence before going in, right? But the clue here is the inverted fair value gap was delivered algorithmically here. The candles they never violated the highs. Okay, so okay, broke down fair value gap, broke down and went for the sell side here. Why is this sell side? Because that's the S&T. Actually, not even that, but here. So here you have the dealing range from. You can take it from all the way down here, honestly, from the V shape, or if you want to do it from here, that's also fine. Either way, this is a premium fair value gap. Okay. So premium fair value gap delivered sell side. This is the reason I'm taking this as a sell side is because this is the S&T, so this is the highest probability sell side level. The market can go here as well, but look what happened afterwards. It didn't go there. It went there just now. So that's why I'm using S&T lows and highs as my liquidity targets. I know this is the actual sell side level, but that's also an order block. As you can see, if I draw this in time, so this is the OB, right? You see that rejection? You see these rejections? So let me actually draw the mean threshold as well. This is the OB mean threshold. You see this, this, and rally. So as you guys know, the trading is all probabilities. So take the highest probability things and leave runners after all. Here though, let me see if it diverged or not. I want to see a divergence somewhere here. This is not a divergence. Sell side was engaged. Maybe in the consolidation it diverged. So I'm looking at the both lows. Okay. So after the sell side, here is the S&T. Send the price where? Buy side. Okay. That's how we read the S&T divergence. The 1 minute S&T divergence, 1 minute buy side. Okay, that's basically how I see it. And dealing range of this whole thing, you can take it from the high all the way down here because this engaged with the sell side. This engaged with the sell side. Okay, so initially it's this. Then it went for the sell side one more time. So you need to take the low. You need to adjust it. Trade it up to the premium fair value gap. Let's take this. And then basically afterwards it was just a consolidation, honestly, like choppy back and forth. But something to mention in that price action is I don't remember where it is. Okay, here. There's a higher time frame S&T divergence at the highs, would send price down to the sell side. The divergence, this is I think 5 minutes if I'm not mistaken. I'm gonna check 15. It's a 15 minute. So if it's a 15-minute divergence, what you know, so here as you can see, the range, premium fair value gap. I'm going to take the premium portion, and it's respecting that fair value gap, diverging. Okay, so if it's a divergence on the 15 minutes, okay, now I can see this as a 5 or a 15-minute divergence by looking at the 1 minute, but you might not be able to see that just yet. Okay, so if you know that this is a higher time frame divergence, just switch the time frame for a minute and look at that time frame sell side. So this is divergence on the 15-minute. Where's the sell side? Right here. Before that, before this S&T formation, there was no sell side at all. Okay, before that. So it's this one. So the objective of the S&T was to take out that time frame's sell side, which is here. This is the highest probability target. So it engaged with the sell side here at around like 3:15 p.m. and here it diverged, formed 1 minute. Let me see if it's a 5. I think it's not. It's a 5-minute high, 5-minute S&T. So knowing that it's a 5-minute S&T, what do you have? It could do two things. Okay, it's either way. It's in buy model. It's going to engage with what? It's going to engage with either liquidity or it's going to trade from discount to premium. Okay, so you have to have dealing range. This is the 5-minute high, also the S&T. You can target SI, take partial, and eventually leave runners to the side because this is a premium fair value gap. It could have failed there, but it didn't. So it high resistance liquidity run, and after all, it engaged with the buy side liquidity right at 354. Now before that rally, it didn't diverge further, but what happened is I think this was on ES, traded down into the range EQ here, as you can see. Nasdaq didn't, which is what it is. And delivery, buy side delivered, V shape. Now the overnight price action doing what it's supposed to do. You have a V shape reversal, S&T divergence, as you can see. This is after hours. This is a higher high on ES on Nasdaq. And on ES, it's a lower high. S&T divergence, that is a short. Price going for what? Sell side here. This is the after hours. So came up for, so this is the market open at 6 o'clock. Traded up to where? Premium fair value gap and went for what? Sell side. And now it's going for lower. It should engage with right here because the EQ was lost. And we have the hourly S&T, meaning this is the hourly low and sell side, so it has to go down there. So anyways, even the after hours price action, overnight price action is clean right now. You can trade these things as well if you want to. with more size, smaller stop loss, speculating around the end dog. So if you know that it's drawn into here, wait for the S&T, okay, which essentially happened before market closed in the after hours. So end dog high, you can sell this. Why? Because you are actually selling above open price on the daily time frame. And then if you hesitate here, just wait for the end dog to flip. Once it flips, here this fair value gap, you can utilize that because at this point it shouldn't go above the end dog anymore without engaging the sell side. But here it offered what, 24 points. So the way I would trade this is basically just like this: 9 point stop loss, 25-ish point target. I would use probably like 4 contracts or something and just take it out. Sometimes I do this, sometimes I don't. Today I didn't because I was tired of looking at the charts the whole day. But anyways, hope you guys find this insightful. I'll talk to you guys tomorrow. See ya.